Last week, the markets were very strong, however they are closed today. Not only is Trump being sworn in as the 47th president, but there is also the observance of Martin Luther King Day. There is some information though that we want to bring to your attention, and that is Nancy Pelosi, the infamous trader, has in fact filed some new buys as well as sells. Now we're going to cover every single one of them in today's episode, but the main reason why we continually talk about her is because she massively outperforms the S&P. Just over the last 10 years, her portfolio is up 767%. When we compare that to the S&P, it is up only 218% in comparison. Now we're going to jump straight in, talk about the first one, which is in fact Amazon options, and this does expire next year, and this is typically a very bullish signal as it is a common strategy for investors who believe there will be upward price movement, and we can see she did spend around $250,000 to $500,000 on this purchase. Now we'll very briefly touch upon each one of these companies. Amazon itself is already up nearly 50% over the last year. Over the last 10 years, it has more than outperformed the S&P by a significant distance, up 1,347%, and yet it does trade at the upper end of the 52-week range. Not only has Nancy Pelosi been buying, but we also notice Wall Street themselves give this company a strong buy. Now with each of these companies, we'll just very briefly discuss where we see this at, and we have the intrinsic value at $253, and this is derived from our DCF model. Now we have our free cash flow year on year. Average growth is skewed as this company has had some years of negative free cash flow, but we've gone for 20% moving forwards with a discount rate of 8%, and using their expected 2024 of around 50 billion, we get the present value of future free cash flows and terminal value, which we in turn add with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as you can see, $253, which does indicate to us 51% upside. But as always, these numbers are subjective, and you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's Amazon or any others. Now we have used the low rate of 20% today, but for those that believe it should be higher at 25%, $342, indicating 51% upside, and for those that believe it should be a lot higher at 30%, $459, that indicates a 103% upside, pretty much a double from the current price. Now if we do take through the low rate in today's episode at 20%, this does give us our intrinsic value, which we do always like to apply a margin of safety, 10%, execute on that if it meets our 3 golden criteria: wide moat, strong financial metrics, and good forward-looking data. That is pretty much where we see this company today, so we believe Amazon has a 10% margin of safety. Now Wall Street, they do have a strong buy rating, but they see this company around $254 at the end of the year, which only translates to 12% upside. We do, however, note Nancy Pelosi, a great trader, continuing to outperform, did buy a significant amount just over the most recent period. We then move on to her next trade, which is to in fact buy Google, and we can see again very similar to Amazon, around $250 to $500,000 worth. And if we look at the company, up 39% over the last year. Over the last 10 years, again, massive outperformance, up 623%, also trading like Amazon at the upper end of the 52-week range, and we also get that buy rating from Wall Street. Unlike Amazon, it does also pay a dividend around 0.41%. If we look at the value of this company, well, our intrinsic price is $215, and the rates that we have used are 10-12%. We have gone for the median rate of 12%, and as you can see, that does give us our intrinsic value, which indicates 10% upside. But if you use the lower rate, actually we see it as a little bit overvalued. If you use the upper end of 14%, you can see 26%. Nonetheless, we've taken the medium rate, and when we do apply a margin of safety of 10%, it is pretty much around the $194 mark, meaning similar to Amazon, we believe Alphabet has a 10% MOS, and Wall Street, with their price over the next year, see this at $225, indicating 15% upside. But again, Nancy Pelosi, similar to Amazon, has been buying this near the 52-week high. We then move on to the first of 3 trades that she has done for Nvidia, where she bought on December the 20th around $500,000 to $1 million worth. In fact, we can see that around 50,000 shares. It doesn't stop there, as we can see just a few days later she sells around 10,000 shares. So actually that isn't all of the Nvidia that she just bought a few weeks earlier, and we can in fact see just on January the 14th she did buy some more options, so clearly very bullish on this company, around $250 to $500,000. So maybe this is one that she does believe will continue to outperform, like we have seen not just over the last year, up 146%, but also over the last 10 years up more than 26,000. Similarly, like the previous companies, Amazon and Alphabet, trading at the upper end of the 52-week range, a strong buy from Wall Street, and we do also note they pay a yield, although fairly trivial, at 0.03%. In terms of our intrinsic value, well, $179, you can see the different rates depending on what value that provides that will give the relevant upsides, but we've gone for 25%, which with the $179 does give, even at this value, quite a nice margin of safety. We're talking actually more than what we saw for Alphabet and Amazon, not at the 25% level just yet, but at least 20% up to $144, and Wall Street continue giving this a strong buy. They see this at $178 at the end of the year, translating to 30% upside, and as always, do give us your thoughts in the comments below. Now, before we continue, we just want to let you know we have today released our latest free weekly article. We draw one every single Monday morning where we cover significantly undervalued stocks for your attention, as well as what's gone in the market over the last few days. So click below, you can sign up, read straight away, where you'll be able to gain access to 46 undervalued stocks for the month of January, and on top of that, you can grab a recently released copy of 43 stocks that Wall Street themselves believe have the most upside in the S&P right now. So click below, sign up, and you can read straight away. The next trade, and quite a significant one, is that she bought more Palo Alto Networks at the back end of December, and in fact we're talking between $1 to $5 million worth. This is one she had previously bought, and we can see over the last year, not the best performance, up only 7%. Over the last 10 years though, similar to the previous companies, massive outperformance of the S&P, up 738%, right now trading at the upper end of the 52-week range with a buy rating from Wall Street. If we take a look at the value of Palo Alto, we can in fact see our intrinsic value of $221 is based on a 16%, and you can in fact notice, for those that believe it's lower, still upside 18%, around 43. So if we were to apply a margin of safety in today's episode, you are getting at least 10%, and as we do keep going, in fact, you are getting around 20% at this current price, with Wall Street believing upside of 19%, their price target a little bit lower at $210. Again, another one that Nancy Pelosi does like quite a lot, as she has bought it historically as well. We then move on to TM, which we can see Nancy Pelosi has bought, although on the lower end, around $50,000 to $100,000, and we can in fact see the first thing to note is that their market cap is on the lower end, around $5.5 billion, yet we notice both Wall Street and Seeking Alpha consider this a buy, and the earnings per share at negative 1.7 on a forward-looking basis means that they are yet to turn a profit. And we can show you this just from a quick look at their income statement. Whilst their revenues have been increasing over the last few years, going from 62 million in 2019 to 532, when we do scroll down to take a look at their bottom line net income, straight away from the graphical perspective, we can see they are yet to turn a profit. A loss of 115 million in 2019, right now sitting at a loss of 214 million, and given it is a very small company, this isn't one that we do want to use in the valuation until they do start to turn a profit. Then we move on to a fairly big buy, VST options, as we can see January the 14th, we're talking $500,000 to $1 million, so quite a substantial one, and when we do take a look, it is up just over the last year, 330%, and over the last 5 years, outperformance massive of the S&P, up 645, trading pretty much near its 52-week high, with Wall Street again giving this company a buy rating, and it does pay a dividend, although on the low end of 0.52%. We then move on to a company she's actually sold, and that is Apple, pretty much on New Year's Eve on December the 31st, where she sold around $5 to $25 million, in fact 31,600 shares, something that we've actually seen Warren Buffett do as well, continue to sell shares of Apple on a quarter-by-quarter basis. In terms of the performance, well, they are up 26% over the last year, and I'm sure you already know, massive outperformance over the last 10, up 714, and we do see it right now trading at the upper end of the 52-week range, with a buy rating from Wall Street, and also paying a dividend on the lower end of 0.43%. If we take a look at the company, our intrinsic value of $208 pretty much signals right now, given the price trades higher, that this company does trade at a premium, and if you did want a margin of safety of at least 10%, you would need to wait to $188. So trading at a premium, Wall Street themselves, whilst they do see upside at $246, this is only 7%, and interestingly, this is Nancy Pelosi's only sell from the latest filing. As always, give us your thoughts in the comments below. Don't forget to sign up to the free weekly newsletter and grab those spreadsheets, and come and join us in a Patreon where we do cover our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.